For more on where the market is headed, now joined by Sam Ine, a stockbroker at TFS Securities. Sam, thank you very much for joining us. So we have quite a few results to discuss this morning, but first of all, your thoughts about the rally we're seeing in the market. Yesterday was up about 1.5%. It's up again in early trade today. One gets the sense that we have a pretty strong bull run going right now.
Yeah, exactly. And I think this rally is being fueled by the success government has recorded in the power sector reforms. We'll recall that the rally actually started with the phenomenal and chart-busting growth we experienced in the price of 40 oil. 40 oil, we recall, bought the Geregud generating power plant, and Transcorp also bought the Ughelli power plant. Now, this has actually caused the rally that we're seeing. Like I said in previous interview, the market is basically readjusting the price of Transcorp to be able to come at par with the current assets that it has acquired. This rally is likely to be sustained since Fed is not too serious about scaling down the existing stimulus program anytime soon. Because if you look at it critically, we are expecting that the politicians in Congress, in the U.S. Congress, might not show some enough fiscal responsibility concerning the debt talk that is ongoing, and Fed might need to maintain that stimulus for some time until the debt talks is over and a good decision is taken about the debt limit. Now, once that is done and there's a clarity in direction, then Fed might begin to think about scaling down the stimulus. That will be anytime from March next year. So for now, this rally is being fueled by the ongoing stimulus program in US, by the success of the power sector, and I think it's just going to help to revalue some of these stocks that have been grossly underpriced by the market for some time now.
Right, let's focus on some of the numbers coming out today. Sterling Bank has reported. We're still seeing some numbers out of the banks. At least only a few are left to report. So Sterling Bank reporting today, earnings per share up about 13%. Your take on that, and how has the market reacted to this?
You know, Sterling Bank has actually told the market its plan for the future in terms of strengthening its capital base, the first tier capital and the second tier capital. And we know that in doing that, they have done a rights issue for in the recent past, which was very successful, and we expect that they will go on with their plans to do a bond issue next year, which is going to be in the foreign market. So Sterling is the bank that is focused, and I'm not really surprised that the earnings per share and the top line is growing. And I don't see Sterling Bank being adversely affected by the ongoing CRR structure that CBN has in place. So I see it as a retail sector and private sector driven bank, and I think it's a good bank to watch. I've not had enough time to study the reports to be able to talk about the net interest margin, the capital adequacy ratio, but I think Sterling Bank is the bank we need to watch as the days unfold.
Well, as you say, we will be watching that stock and how the market reacts to those numbers. But moving to the insurance sector, we did see Prestige Assurance and Royal Exchange report mixed fortunes there. We saw Prestige report a profit of 593 million from a loss of 216 million in the previous year, while Royal Exchange also reporting, in this case, the PAT was down about 4% to 216 million. Your take on the numbers we're seeing out of the insurance space?
No, basically, well, like I said in the previous interview, that the insurance sector wasn't too good to look at, but I think Nascon has done a lot in that industry, and a number of insurance companies have released their 2012 audited report, quarter one, quarter two, quarter three results, and it's really quite encouraging, and it's making an analyst like me to look critically into the sector. And in doing that, I discovered that Mansard has the highest profit efficiency, followed by Custodian and Allied. And Prestige just released the results yesterday, shows that the company has now returned to profitability. So I think the insurance sector is being repositioned to take its place, and the solvency margin that Nascon has put in place will be able to sustain the industry. I'm not going to be surprised that going forward that Nascon might be making some new rules concerning their capital adequacy ratio, particularly in the area of paid-up capital. So I think the general reforms going on in the entire financial service industry in the country is taking a positive hold on the insurance sector.
All right, let's move back to those stocks you mentioned earlier, Forte Oil and Transcorp. I want to get your take on those ones. There are mixed views on this, particularly for Forte Oil. I think a lot of people feel that the rally is way overextended, regardless of whatever assets they have purchased. Now, on the flip side, I think some people feel Transcorp still has some legs. This rally could still extend a little bit.
Yes. No, basically, if you recall the efficient market hypothesis, we've been told that when events happen in the market could either overreact or underreact. So it's normal if the market has overreacted concerning Forte Oil and if the market is still reacting as per Transcorp. But what you must put to mind concerning technical analysis is that when the angle of ascent is too high, you do not expect the stock to experience a price crash. You expect the stock to probably move down and fall into the consolidation market. So what we have seen in Forte Oil is basically in line with the efficient market hypothesis and in line with technical analysis. The stock will probably just enter a consolidation market, and if there are further events that probably swell investors' interest and confidence in that stock, then it might begin to go up again. But if the reverse is the case, then the share price might now go below the bottom in the range and begin to go down. So what is happening basically is just in line with these various school of thought that I've mentioned.